My name is Joe Smith from Sutherland's Gladstone. Today I'm going to speak about cryptocurrencies, specifically Bitcoin, as it's been dominating the headlines over the past few months. But there's one very important thing that really hasn't been in the headlines, and that is how they're treated for tax purposes in Australia. So it's an area that the ATO are keeping a very close eye on, and they're consulting with experts on how it should be taxed in the future. And they have issued some guidance online just as recently as the 21st of December 2017 on how they believe it should be treated in specific circumstances. So the view of the ATO currently is that Bitcoin and cryptocurrency is neither foreign currency or money, but it's to be treated similar to a barter arrangement. And from 1st of July 2017, the sale and the purchase of Bitcoin isn't subject to GST. So if you're simply using Bitcoin to purchase personal goods or services, and you're not in the business of buying and selling or mining Bitcoin, then there's no income tax consequences. Further to that, if you do have any gains or losses after using Bitcoin for these personal purposes, it's treated as a personal asset if the cost of the Bitcoin is less than $10,000, and again there's no tax implications on that scenario. The next scenario would be for someone that's mining Bitcoin. So that would be treated as carrying on a business by the ATO, and as such any income from the transfer of Bitcoin to a third party is treated as assessable income, and any expenses that are incurred in mining the Bitcoin are allowed as a tax deduction. However, one thing that should be taken into consideration is the non-commercial losses provision, which I won't go into in detail, but it's something that you should really talk to a tax expert about if you are mining Bitcoin. And if you are mining Bitcoin, any stock that's held is treated as general stock, similar to stock that's held in any other business operation. Finally, the most probable scenario is that Bitcoin or other cryptocurrency is acquired as an investment. So if you're not carrying on the business of buying and selling Bitcoin, any gains or losses would be subject to capital gains tax, with tax payable on any gains made, and any losses that are made would be available to offset against any capital gains in future. One key thing here though is that if you are regularly buying and selling Bitcoin, then it's quite likely that the ATO will treat that as a business, and it's subject to some specific tests and criteria that apply to any other business operation test. And if you do have any issue with that, it's really important again to talk to a tax expert. Now, one thing that really should be kept in mind that the ATO are very resourceful, and if you get audited by the ATO, they can go in to look at your personal lifestyle, living expenses. They can ask for all your credit card, bank statements, everything like that, to get an indication of how you live. So in the case that you have made a gain on the sale of Bitcoin or cryptocurrency, and you haven't declared it to the taxman, there is ways that they could find it. Now, obviously, when you're purchasing these initially, if you're using an exchange and you're paying for it in Australian dollars, then the tax office will have access to that information, and then if any gain is deposited into an Australian bank account, the tax office can again have a look at that as well. So although there may be some reports that it's untraceable, the ATO are very resourceful, so please always talk to a tax professional if you do own or are planning to purchase cryptocurrencies or alike. If you've got any tax queries on this area, please call the tax experts at Sutherland Gladstone on 49721300, or email myself, Joe Smith. My email address is j.smith@sutherlandsgld.com.au. Thanks for watching. Bye.